All right. Hey guys, Brad here at Elliott Wave Made Simple. And today we are going to dive into the oil chart, maybe the NASDAQ. We'll look at the dollar. We'll look at gold and maybe a currency pair or two. We're going to keep it brief tonight. I'm off camera. Uh, and we're just going to get right on with it, okay? So let's dive into the daily crude oil chart. And what we can see here is this top. And I know a lot of folks get really bullish when they see this price coming up. But the way we measure things in Elliott Wave, we are pretty good at discerning where the tops and reversal points could be and the bottoms and so forth. Nothing is 100%. Obviously, we are dealing with a field of probabilities, but Elliott Wave measurements and fibs give us an edge, as anybody inside of the Professor Trades club knows. Man, if you're in that club lately, you've been watching the Professor, who is Armando, and many of the members do amazing things. Let's get on with the oil, crude oil, okay? Here's a daily chart. Now, if you're in the club, you've been following me, you know I've been clocking this impulse, which sure enough came up in 5 waves and got rejected. Did it get extended further than where I thought it would? And then price is now all the way back down to the 382. Now we need to drill down a lower time frame to get some more insight as to what is going on here and where might price be going next. Before I move on to the lower time frame, I'm just curious. I have a bunch of different tools that I don't always present, but during the day I blink them on and off just to get some insight. And right now I'm about to turn on this tool that clocks volume, and it does so on a per candle basis, and it clocks buying volume and selling volume on a per candle basis, and it's basically comparing it to an average. It looks back. It looks back over a certain period of time, which is definable, and then it's comparing the buy volume or the sell volume overall. And the bigger the buying volume or selling volume, the bigger the bubbles. And in the room, we joke, the other guys that are using the same tool, we call it bubblicious. And what you'll notice is that generally these tops can be indicated by a bubble. And what's always amazing to me is sellers sell the bottoms. They sell the lows. Look, they sold the lows here. And what that means is people were shorting way down here. People are shorting. And when everybody's done shorting, price goes up. So it's kind of a contrarian indicator. Look, there's a bubble here. There's a bubble up here. There's a whole bunch of bubbles over here. And, is it an indicator that I trade? No. Is it something I blink on and off to gain insight? Yes. And I do it on multiple time frames. So that one is called Market Order Bubbles by Leviathan, and it's free 99, my favorite. So another thing I've been looking at also, which the Professor Armando strongly encourages folks, just use a SAR. It's such a simple, wonderful thing. Ours are set to 0.5 or 0.1, depends, user choice. I actually, on some charts, use both. I have 2, and one is set to 0.5 and one is set to 0.1. But in this case, you can see that what happened over here, we broke structure and we created dots. So now you have 3 days in a row with this top dot, and the pressure is clearly down. The structure indicates price needs to correct more. Could it bounce? Absolutely. In fact, it's going to bounce. But the idea is this is a very complex crude oil structure, very difficult to track and trade. It's actually easier to scalp. And that's what attracted me to Armando's club over a year ago, was his ability to scalp crude oil so effectively. And he shares so much of his methodology for free on his YouTube channel. So I cannot speak highly enough about Armando. By the way, the link to his club is in the video description of this video. So you can go down there and click a link to join. And at slightly over $1 a day, you're going to get all the wisdom of the Professor plus the Elliott Wave stuff. You want to get the Professor Trades Plus, which gives you both his room, all of his analysis, and the Elliott Wave room, which is hosted by myself. I'm Brad, and there's a few members in there that are really, really good, skilled practitioners of Elliott Wave. So we're getting a great community going. I encourage you to join us for a little more than $1 a day. You can do away with all those other services and clubs and subscriptions that you have if you're feeling like they're worthless and you're blowing up accounts or moving your stops or basically not generating any consistency in your game. You got to come join us inside of the Professor Trades Club. Okay, so you got the SARS going, indicating it's bearish. You got the bubbles up here, people buying. Sometimes I blink on this. I like to use the 834 and 89 EMA, 834 and 89 EMA for scalpers, day traders. I just use it as a guide. And you can see now we got these candle closes after this long period of time where we had nothing but riding above this 8 period EMA, which is pretty remarkable to go that many days riding above this 8 EMA. Finally got a candle close below there, and now we got a little back test with that wick, got rejected. So at the moment, this will act as some kind of support, some kind of bounce. I mean, if it's going to go lower, it's going to bounce from somewhere down here. This would be very reasonable to expect price to make its way down towards the 618, which at the moment, the 89 EMA comes in right around that same level. Okay, so what we're establishing here by talking about this daily is that we did complete 5 up, and we did complete it in the context of an A, B, C. I'll just make one measurement because I had to make this chart fresh. I'm using a daily continuous contract because I'm tired of switching around all my charts every time a new month or a couple of months come by. So in this case, I'm just using on the daily only, just a continuous contract, back adjusted. All right, so there's your A wave, there's your B wave. So the question is, where might you expect a C wave to top? Well, typically it's going to be the first fib is the 100 fib. So you can see up there, if I put the B there, the 100 fib comes in right there. If I put the B a little bit back further, you can adjust it. But the point is, I'm counting that as the B. So this is 5 waves. It did come up very near the 100 fib. But the main guidance for me was the internal structure of this move up right here. Okay, so that's enough on the daily. Let's hop down to the 4-hour chart. Now we can really see some detail. Okay, and actually, what are we looking for? Well, what we're looking for is some kind of a move to really give back. See, ABC suggests corrective. So ABC, all of this is moving in threes. You can clearly see this is a 3-wave move, right? Can you see this? A, B, C. This whole structure for this A wave is in 3 waves. This B wave is wildly complex. It's overlapping in threes. It kind of has the characteristics of a triangle. So maybe it's a B wave triangle. I mean, you can get a triangle in a B wave position, so that's not too unusual. But the real clue is this impulsive, clearly impulsive structure that busts out of this range. So if you consider that as corrective, so this is probably something like the bottom of a wave 3, and then you've got a 3-wave correction for wave 4. And so what we should be looking for now is an impulse. Finally, we should be, based on the context of this entire structure and the way I just explained that it's in 3 waves, ABC, and all this internal stuff is overlapping complexity. What we're looking for now is to get an impulsive move down. How we don't have to worry about exactly where it's projecting to in terms of the longer term degree. But what I am doing is looking at the lower degree because I'm a day trade scalper. I'm looking for where might this be headed to. And the way I'm counting this right now is this is wave 1, this is wave 2. That's what these fibs are projections of. So the obvious area to see some kind of a bounce is right down here at the 1618. I'm very pleased it did not get much above. It really got rejected right here at this zone. This pivot to me is important. It's based on Elliott wave. So once price in an impulse, once price gets below, anytime you see a pivot on my chart, once price gets below my pivot, you do not want to see price come back up above the pivot. Can it? Yes. But in this case, if price were to make it at least to the 1382 or sometimes the 1236 and then get back above the pivot, I discount the impulse. It's really a diagonal at that point, because if it breaks back above the pivot, in this case, is going to overlap with what I'm calling wave 1. So in a pure impulse, you do not want to see price come back up above 76.93, and this is the March futures contract on the NYMEX data feed. So here's a parameter. If you're short, you do not want to see price come back above 76.93. You want to think about trimming your shorts if you're a day trade scalper. Now, I'm holding this longer than a day trade scalper here, okay, because I'm holding this overnight. So I'm swing trading here, but I am at heart a day trade scalper. So if it starts going, I don't play games. If it starts to go against me considerably, I'm going to get out. I may restrike. But at this point, I'm not small enough to let it come back against me. I've already added, so I'm too heavy to let it come back up against 76.93. I'm not going to stay in it. Okay, that's a parameter for me. The first place to trim would be right here in this zone, the 1618 at 74.65. But ultimately, if this price slices through this level meaningfully, okay, I'm not going to take anything off. Now, if it comes down and slows down, if I happen to be looking, I'm going to look at it later tonight. I'm going to look at it first thing in the morning. Usually I start looking at the markets around 6 a.m. If it's considerably below this 1618, I'm going to leave it all on, and I'll look to take it off somewhere down here, because I think if it's going to extend in what I'm going to consider the wave 3, I'm going to measure for the wave 4, which should come nowhere near this area. If it extends further down into this area, then I'll allow it to be a wave 4 and come up correctively. Should not get anywhere near this pivot zone on that wave 4, and then give one more shove to come down. Wouldn't that be poetic if it just extends? It makes it at least to the 50% fib, but I think it's kind of interesting that the 300 fib lines up almost to the penny with the 618. So I'm bearish. I don't want to see above the pivot. And if you hit a Yahtzee, like if you take off some gains here and then take off some more gains right here at the 72.87, and then if you're lucky enough to still have a runner on, man, I'm taking it all off down here, because what I would then expect, wherever this bottoms at, if this is a true impulse, it's going to come down in 5 waves. Whenever it bounces, I'm going to try to get out of I'm going to get out of my shorts, not try to get out of them. I'm going to get out of my shorts somewhere, depending on the price action. And then from wherever it bottoms, I'm going to wait, and I'm going to layer into shorts using very small size, because the real move, the way I'm viewing this, the real move is if this comes down in 5 waves and then gets a bounce in 3 waves, the next wave down is going to be the holy grail for a swing short. And that is to catch a wave 3 of a larger degree than what we're tracking here. This is 1 degree smaller. So this would be like this: 1, 3 waves for wave 2, and then a nasty, long, direct wave 3. And when I say direct, it's still going to have structure, still going to bounce. I mean, this is direct, but look how many times it bounced. Look at all these scalp opportunities to the long side. But if it plays out, oops, I just hopped. Yeah. If it plays out the way I'm hoping, it'll give us a chance to play this short. I'm not so interested in playing long, but if I see something that's clear, even though it's going to be corrective, I'll trade long. I'll scalp long in a correction, sure. But the real deal is to stay short and to layer into shorts. So I don't really want to mess around with being long through here. Now, also, there's a news day tomorrow, by the way. So expect wildness. I view news as a catalyst that just pushes price to fibs that it wanted to go to anyway, and news is the catalyst. Like sometimes there's 2 options. Well, there's always alternates. There might be 2 ideas. Well, maybe it's going to go this way, maybe it's going to go that way. And then there's news, and it picks a direction, and it goes fast and hard. And then people assign the movement to the news, whereas Elliott wave practitioners assign the news the label of catalyst, not the driver. News does not drive the price structure. It doesn't. That's absurd. But, that's a conversation for another time. News is a catalyst. Yes, it catalyzes price action for sure, but the fibs are what they are. I've just seen it too many times. I've been doing this too long to think otherwise. And actually, I shouldn't have even mentioned it because I'm not really interested in having a debate because it's tiring. You trade what you trade. I trade fibs. Cool. So let's go down. And I didn't really work this chart up on this level. I would just point out that you see the bubbles. People are buying these tops. This is a 1 hour chart. See how folks are buying the tops? And then when it comes down, it didn't get any outside selling until this low. And then right after all these people bought, layered into their shorts and threw the house through the kitchen sink into the shorts right here, then it went up. Stopped everybody out, and now it's come right back down to where it was. So very bearish. I was thinking at one point it could bounce higher from here, but after taking more measurements and examining this 4 hour chart, I think it comes down lower. So that's crude oil. Sorry, I got too long-winded on the oil there, but that's kind of the main attraction of the Professor's Trades Club. If you're an oil guy and you like my stuff, you like my analysis on oil, that you're watching these free videos, you got to join the club. Armando will blow your socks off with his oil track and everything else too, actually. NASDAQ, gold, metals, currency pairs. Armando's all over it. Anyway, that's my plug. So looking at gold, B-Wave, I've been saying this for a long time. I don't think it burned enough time off the clock for this to be all of wave 4. By the way, this is a wave 3. I redid my gold chart. So I lost some of the labels because I'm now using a daily continuous. Actually, wait, that's not the continuous. Bam, here we go. I redid my gold chart daily using the continuous contract because I'm tired of changing them all the time. Same problem in oil. So on the longer time frames, gold, daily futures, COMEX data feed. You've got a 1, 2, 3. By the way, somebody somewhere on my YouTube channel, somebody just commented that you can never say you know where a wave 3 will terminate and that using measurements and Fibonacci's doesn't work. I didn't reply to that comment because it's absurd. I've seen this a million times. All right, I've been doing this 5 years hardcore, like every day for 5 years. The 1618 is right here on this gold chart. This is a daily gold chart. It works on multiple time frames. It depends what the instrument is. It works less reliably on some instruments and more reliably on others. When gold is in an impulse, it plays very well along Fibonacci standards. I'm just showing you this daily so you have a context for why I'm talking about shorting gold. When you're looking at this, you're like, what is he talking about? Gold is crazy bullish. And I agree. Yes, it is crazy bullish. But I'm a day trade scalper. I'm not scalping a daily chart. I'm using the daily chart for guidance. So if you've been following me in the room, you know I was looking for this wave 3 long before we got there. You know, I put this ratio box on there. You know the 1618 is right there, which is the 1618 of this move. 1, 2, 3. And inside of wave 3 in a standard impulse should be composed of 5 waves. And that's what you have. 1, 2, 3, 4, 5. All these subwaves check every box of the guidance that Elliott Wave provides. Do all instruments do that? No, not even close. But they are still good guidelines and it's still valuable, even if it may not follow them as closely as other instruments. You just got to be familiar with the instrument that you're trading. So in this case, gold is following it. Now, this, as soon as this came down and bounced, everybody went, ooh, it's going to the moon again. And I don't think so. Because why? Well, if this is how long wave 3 took, there are certain fib timing ideas that are worth paying attention to. Timing is the most difficult part of any trading system. Timing. It's very slippery, very difficult. Structure, price, way easier to deal with than timing. But I got a little bit of an insight into wave 4 timing. And the idea is this is nowhere near enough time to complete a wave 4 of this degree. Could it be a wave 4? Could this be done? And we are now going up to finish off this wildly bullish structure to come way up here and get above 3,200 an ounce for gold. Is it possible? Yes, of course. How likely is it? I think it is less likely. Doesn't mean it won't happen. If you've ever played poker and you're playing Texas Hold'em and there's no more cards coming and you got 4 clubs and you just need one flush. Sorry, there's one more card coming and you need a flush. So you need one more club and you're sitting at a Texas Hold'em table. Nobody knows what you have. You got 4 clubs and you need one more to get a flush. Your odds are 3%. unfortunately, Elliott wave can't define odds quite as clearly because there's so much subjectivity in this game. But I would say if this is the low and this is going up here, that's like hitting a flush on the river if you play Texas Hold'em. It can happen, and some people do it and you win big. If you do that and you win, congratulations. I think it's more better to just play what is most likely. And once you've been doing this for a while, you get a sense for things, you get experience. So look, the low could be in, but the other thing I don't like about this being the low is this structure is overlapping and moving in threes. Gold is producing an impulse, which means that every subwave should be an impulse, and the only thing that should be overlapping is a potential wave 2 and a potential wave 4. Nothing else should be overlapping. This wave 1 is not overlapping. Actually, this wave 2 looks really good as a wave 2. This is not overlapping for wave 1. This is overlapping. It looks like a wave 2. It's corrective. Fine. Flat correction. This is clearly an impulse. This is clearly overlapping GORP, which is what you'd expect in a wave 4. By the way, holding the blue fibs where you'd expect to see a wave 4. Then you have non-overlapping impulse for wave 5 of 3, hitting a ratio box just where you think, hitting the 1618 just where you'd think. And then now you're entering a larger degree wave 4, which means what? It means wave 4 should produce overlap, complexity, moving in threes, net gain of 0, meaning it's not going any higher and is just chopping along. This has not made a new high. It's chopping along. Okay, so my thinking is it's coming down now. And one way to think of this is A, B, C. And if that's the case, because that's typical for wave 4 or any correction, look at it in 3 waves, measure for it in 3 waves. So if this is wave A and this high right here, this is speculative now. We're going to look at a lower time frame in a minute. But if that high is in and it's a B wave, these fibs down here are where you could expect the C of 4. Okay? So, and also this blue box is where you'd expect a wave 4 of this degree to reach. Well, it barely touched the 236. That's another piece of evidence, like if you're in a court, if you're having a trial on whether or not gold is bottomed or not, and I was a lawyer representing the folks that say wave 3 is topped, but wave 4 has not bottomed, class action lawsuit against the bulls, I would say that reaching the 236 is certainly allowed in terms of Elliott wave guidance to be all of wave 4. It's allowable. But how likely is it given the degree of this wave 4 that we're at and the breadth and the scope of this wave 3 in terms of time and price? I think wave 4 needs to come down more. It needs to burn more time off the clock and it needs to come down. At least to the 382. But, the 100 fib would still be a great short trade because we're short in the Professor Trades Club, swing short. So that's 25. That's like $200, $250 lower than where we are at the moment. So you don't need to catch the whole $250. How happy can you catch $20? Can you catch $80? How about this? How about you put on 3 positions, and if you don't get stopped out, you take one position off at $20, take one other position off at $100, and take the other last position off at the 1, 2, 3, 6. How about that? Take your gains incrementally. All right, I'm babbling enough. Let's go down one level here. Okay, that's the February daily. This is the February 1 hour. I didn't want to get off the February contract COMEX gold futures because I had put so much time into all these measurements. This is a diagonal of this final 5th wave. That happens when price runs out of gas. This final move up can be a diagonal. So on the 1 hour, the final wave 5. So the wave 1 of a diagonal is composed of 3 waves, A, B, C. It measures as such. There's the yellow fibs. By the way, have you noticed I'm very repetitive? All my 3-wave measurements are in yellow. My labels are in yellow and my fibs are in yellow. So if you see anything in yellow, I'm looking for 3-wave move. And the other fibs that are almost always on my chart, if they're yellow, are the 100 fib, the 1236, and the 1382. Now, I do clean up my chart once I dial in what is the closest fib to the price. In this case, it's the 1236 to the penny. Price came up in 3 of this C wave, A, B, and then you got the C wave up right to the 1236 to the penny. That's 3 waves up for wave 1. Then you got a 3-wave correction, retrace 764 of the move. Then you got another ABC that poked above the 100 fib, but didn't quite make it to the 1, 2, 3, 6. But these are all wicks above the 100 fib. So not a single candle body made it above the 100 fib. Then you got a correction. I'm calling this a wave 4. You can look internally. There is a way to count this as 3 waves. Did exceed this a bit here, the level. But guess what? That's in part which signifies the diagonal. Is that wave 4 broke the level of wave 1. So this is telling you, yeah, we're in a diagonal. You already know you're in a diagonal because wave 1 is composed of 3 waves when normally it's 5. Wave 2 is always going to be a corrective wave, whether it's a diagonal or not. Wave 3 is going to be composed of 3 waves, which we have, measures as such, looks like a 3-wave move. Then you get another wave 4 that overlaps the level of wave 1. And then for the final wave 5, it's going to be composed of 3 waves because it's diagonal. So here's your A wave. Here's your complex, overlapping, crazy horse B wave. That's one of the defining characteristics of a B wave and a wave 4 is they're typically complex, overlapping, difficult to trade. I think a B wave is worse than a wave 4. I'll take a wave 4 over a B wave. But a B wave, this looks like a B wave, and that is overlapping, gorpy, and hard to trade. And by the way, there's a fractal nature of markets. See how this wave looks, how it's just overlapping. It comes down, it goes like a couple of V's. Some people look at this as a W pattern. Well, if you just hop back over here, isn't this a giant W pattern? So it's kind of fractal. Like even on a 1-hour chart, you're seeing a similar pattern that represents the same pattern at scale. That's the definition of fractal, self-similar at scale. So I'm just showing you a fractal here, that's all. So anyway, A, B, and this B wave can play out in any number of ways, but if I measure it this wave down to this wave up, it came down right to the 382, almost to the penny, and then bounced, great reaction. And then now we've got this C wave coming up into a known ratio box, another 1382. If you measure the entire structure for a diagonal, it often targets the 1618 to the 1764. Look what price did. Came up and pinball right between the 1764 and the 1618. Bang, 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 bang. Just trying to decide what it's going to do. So if this is the topping area, there's also a timing fib there. It's another story. The idea is hopefully this is going to come down. And if it does, we are targeting at a minimum the 382 with juicier targets below. But we're day trade scalpers, so there's no way I'm going to be still in the same position I'm in now, way down here. No way, not a chance. But this is the ultimate target down here if this topped right where I think it might have topped. So there you go. That is gold. Silver, I'm not going to talk too much about. It's ugly. It's overlapping. It's gorpy. It's really more about this dollar. How far up is this dollar going to bounce? Or is it just going to keep coming down? Can the metals extend higher if this thing really lets loose and just really cuts? Like maybe this is the 1-2 right here, in which case this is going to go directly much lower. Or is this 5 down right here? Oh, that's what I was just saying. 1, 2. So 3, 4, and we're going to get one more deep shove down. I don't know. It's hard. This is very difficult to count. That's why I took my labels off. It is below. I do know about this pivot, and it did come all the way back down here, and it's kind of back testing it right now. I mean, it got below this level, failed there. It's coming up again, got a little higher into it, but it's getting rejected. So the dollar is so important to so many things in markets. Now look at this dollar chart, the DXY. This is the weekly. I have to show you this. This looks like a B wave. Why? Remember what I was just saying? Overlapping, overlapping, and then it finishes off with a C wave. Kind of just like that other chart I was showing you. A bunch of this is an M pattern, right? You can see that M pattern, and then wham, comes way up and then gets rejected rather convincingly. I mean, this is the rejection. This wave right here is the rejection that I'm showing you right here. So this came up in 3 waves right to the 1, 2, 3, 6. It just wicked above the 1, 2, 3, 6. It also grabbed the liquidity. See this candle right here? This is a weekly candle. Look at that. That creates liquidity on a giant candle like that. Very often when you see a giant bearish candle like that, they're going to come back for it. Did they? You tell me. That's been on my chart for a minute. This arrow's been there for a minute. This yellow box has been on it ever since this low over here. It's going back to the summer. Going back to July is where I put this, when I put this target on there. And here we are in January of the next year, hitting the target. Amazing. Elliott wave. Please tell me another methodology that can show you where price might be 7 months in the future with any level of accuracy at all. And the same methodology works on a 5-minute chart as well, although it's less reliable on the lower. Anyway, so the dollar, if the dollar comes all the way down here, metals are going to get their 5th wave. I don't trade correlations. I don't really do correlations. It's each chart on its own. However, you could argue gold is like a currency. The dollar is clearly a currency. So you can make certain arguments about the correlation on longer time frame between the dollar and gold and metals, but I've seen them all trade opposite of each other on lower time frames, quite a lot actually. So don't just look at a dollar chart and then go, oh, I'm going to just short the crap out of metals now, or long metals just because. No, you got to be smart. Use your brain. Each chart on its own. That's what I recommend. That's what I've learned by the great Avi Gilbert, who taught me everything I know from the very beginning. I was in his much smaller club at the beginning. Then I joined his big club, got in the deep end of the pool, and really started learning. This kind of information is invaluable to your trading once you learn how to read the chart, A, and perform your own chart, B. Much easier just to watch me and learn how to read the chart, just so you understand what I'm saying and you understand the characters of certain waves. C wave is a crash-like wave. I don't care what time frame it's on or what instrument you're on. When you're looking for a C wave, you're looking for a crash-like wave. It doesn't have to be down. It could be a crash up or a melt up. So it's always a C wave. When you see a massive move, it's probably the wave 3 inside of a C wave, or at least inside of an impulse. Wave 3 of C is going to be the biggest move. That's why in oil, I was just showing you, if we get the 5 down and the 3 up in oil, we're going to try to grab that short and ride the large degree wave 3 down, because that should be the longest, most powerful wave in the shortest amount of time. You're going to make a year's worth of gain in one trade. Not kidding. That's for swing trading, but that's not really my thing. I do day trade scalping. Anyway, that's a dollar. Okay, so I give you a little Elliott wave education, give you a little analysis. It's a little difficult to say what's going to happen here on the lower time frames. I've measured this 10 different ways. I can't really get a beat on it. So I just know that it's possible the dollar has topped and it's coming down. You'll know because it's going to keep coming. And you'll also know because at some point the metals are going to catch a gear and extend. So, you know, I wouldn't mind at all if the dollar can catch support and give it a wave 2 and come all the way back up into here. While the metals finish off a correction and really drop hard and fast, giving me a better wave 4 in metals that I can layer into longs and try to catch the juicy part of the wave 5. Okay, that is expected in metals. Let's look at a couple other currency. Oh, we didn't even look. Did I skip over NASDAQ? Whoops. All right, NASDAQ, what a killer, man. Just what a killer. This thing extended once and it extended twice. Got short, got stopped, got short, got stopped. Finally, I just left the dang short on there. I traded small enough. Took a lot of heat, but then added. So now I'm coming back down. I'm just about break even on my NASDAQ shorts, but it took a lot of heat. Thank you, Armando, for teaching us to stay small. Here we are on a 4-hour NASDAQ. You finally got a top dot, SAR, right? That I was just showing you about. The SAR dot got a top dot on the 4-hour. I had to redo this measurements. Finally came up. I redid the measurements. I'm going to show you actually now. I was wrong. And what I was wrong in, I had the 1-2 right. But when this thing came all the way up, here's the 1618. So naturally, I'm thinking, well, that must be a wave 3 because it came up in the 1618. This is your 1-2. This is the 1618. It came down correctively, and then it came up impulsively. So I'm like, and this is wave 4. I'm like, okay, wave 5. Boom. And we're above the 200 fib. Actually, let me just see what fib that actually hit. Did it hit the 236? Look at that. I didn't notice that before until right now. So the wave 3 came up. Guys, this is why I don't care about the news. I don't care about fundamentals. I care about Fibonacci. I'm aware of news. I'm aware of catalysts. I'm not an ostrich. I don't put my head in the sand. But I'm not going to trade fundamentals. Just not. Don't need to. So look at this. Wave 3 extended wildly. I thought this was wave 5 at the time, and I did catch some of this short. And when it came up here, I thought for sure this was A, B, and we were going to get a C wave down. That's why this arrow is here. I like to leave my arrows on there to remind myself where I was right, where I was wrong. It also underscores the idea that nobody knows where markets are going, and there's always a chance it could go up or down. I mean, that's always the answer. It could go up, it could go down. But with Elliott wave, we're getting an edge. So I still caught the shorts here, but I tried to short here and got stopped out. Then I tried to short here and got stopped out. Then I finally shorted here and just stayed short. And then I added up here, and then I even added a little bit on the other side of that peak. So wave, this is how I was wrong. Wave 3 came all the way up to the 2.236. And then now wave 5 has almost reached the 300 fib. This blue box, here's the parameters in NASDAQ. Here are the parameters in NASDAQ. Man, I'm sorry you guys that are on a phone or a small screen. I know you can't really see my numbers. I'm sorry. My apologies. I should have enlarged this sooner. So if this is not the top, it's going to hold support somewhere in this blue box. It's going to hold support somewhere in this blue box, and it's going to come up and make another high. With any luck, if it is to do that, it will not exceed this by much. Okay, if it does exceed it at all. I think it would be much grander if this thing can just, let me just do a quick and dirty something here. If this is the bottom of wave 5, right here, the bottom of wave 4, or which is the start of wave 5, and if this is wave 3, let me just see. If this came all the way back to the 382, let me just see on a ratio basis, what would that look like? Yeah, see, I don't like that at all. I don't like that at all. That would just be utter insanity. If the NASDAQ is really going to project, yeah, 3618, man. That would be a heck of a projection. So if this holds down here and starts coming up and makes a new high, yikes, man. Yikes. Then if it gets above this level and like back test it, man, oh man, that is crazy talk. I think it's much more likely because of everything I just explained. It's already extended multiple times. Okay, so here's the deal. This is your clue. If it holds this box, it starts coming up impulsively, meaning it comes down here correctively, and it bounces and comes up in a nano 5 waves, and then gets a 3-wave retrace, and then breaks that high of that wave 1, which is the 5 waves up for wave 1, a corrective retrace, and then it comes up and gets above the level of wave 1 again. Ay, ay, ay. That's going to suck. What I would rather see is this develop as an impulse, come down much further, at least get down into this area, then give a 3-wave correction. Then we can short it more aggressively. Shorting the NASDAQ aggressively? What? Are you crazy? Maybe. But that's not neither here nor there. That's a different subject. So the idea is we're going to let structure of price and Fibonacci help us. So these are your parameters. For right now, I'm staying short. I'm going to let it bounce. I'm not going to let it come all the way up and make a new high. I'm out of here. Actually, if it gets back above this, if it comes back up into this box, this ratio level, 22,048, I'm out. I'm just stepping aside, man. I'm not going to stop out 3 times in a row. I need to leave the NASDAQ alone. I don't remember the last time I stopped out of anything 3 times in a row. So I want to see it come down deeper into this box before it even bounces at all. Then I'm going to stay, maybe I would take off some of my shorts, but I'm going to look at the structure of the bounce to try to discern if it's corrective or impulsive. If it's corrective, I'm going to add back whatever shorts I took off after measuring stuff. And if you're in the Professor Trades Club, you're going to get the guidance on the NASDAQ, and we'll get short again. And the professor's offering incredible guidance as well. I love it when he sees the same thing I do from a totally different vantage point. That's fantastic. That's called confluence. I think we're going down here to at least a 382. I just realized I do not have the price on the... Sometimes when my chart gets too busy, I like to clean it up, and sometimes I actually take the prices off of these fibs because I'm much more interested in the fib levels than the price levels. I mean, of course, the price levels are important, but I'm just saying, I'm trading the fibs, not the money. I'm not trading the money. I'm not trading the price. I'm trading the fibs. All right, so I'm looking for 21,560 at a minimum if it doesn't make a new high. Cool. All right, that's the NASDAQ. Just for fun, we'll look at this trade, which I stuck to my guns, and my chart is updated. You know, I think it's coming down. I think it's coming lower. But with the dollar really dropping so fast and hard, you can see what it did to this pair. But I'm still in the same position. I didn't take the gains. I'm fairly small. I'm new to Forex trading. I'm using Elliott Wave on a lot of these currencies, working out pretty well, man. I almost took the gains in here, but I didn't. And that's fine. It's fine. I'm risking giving back all of these gains. It is, you know, it has turned and coming down, as you can see, because the dollar is bouncing. So, you know, if the dollar gives that corrective action I was just telling you about, that I was showing you in the DXY, then this is going to come down and very likely make a new low where I will cover all. That'll be a great trade. And who knows, maybe I'll go long. Who knows? One step at a time. But that is the UJ, US dollar, Japanese yen. Why am I shorting this structure? This is why. This is really bananas. I mean, this is a long-term weekly chart of the UJ. Look at where it has bounced. It came up in structure. I thought it should have come up higher. It just came up shy of where I really wanted it to come up. So that's why I didn't even catch this short. And then it's bouncing, and now it's coming back down again and getting rejected. So I'm using this chart as well to help me discern if I should just hang on to the daggone trade as a legit swing short. Because I'm a day trade scalper, my DNA is smash and grab, quick gains. That's who I am. So I'm not really experienced with holding for such a long time. This is me doing it. You're watching me do it on this chart. If it doesn't come up here and stop me out, there's no overlap. And wave 4 isn't, I just finished telling you, the character of a wave 4 is overlapping, corrective, you know, net going nowhere. Well, that's this. In fact, let me move this over because it actually made a new high right over here. So I'll call that wave 4, A, B. But Brad, the B would have gotten lower than the wave 3. Yeah, and that happens sometimes. So that's the best way to count this is A, B, C. I think this is called an expanded flat because the B wave got lower than the previous low. A, B, C for wave 4. Wave 4 should be done. This should not come back up again. It's very obvious. If I'm right, if this thing is going down, it's not going to come back up and make a new high. It's certainly not going to get above 156.905, which is the level of wave 1 that I have highlighted here for your convenience. That's a line in the sand, 156.905 on the UJ. Don't want to see above that level. Doesn't mean it won't come back down if that's the case, but it just means it'll do so as a diagonal. This should be a diagonal anyway, now that I really look at this. But look, I'm trading the fibs. That's the deal. One other pair that I'm trading, which is the EU. Yeah, yep. Check out the EU. Went long. Took a little bit of heat. Came back. I don't care. I'm sized to take heat. And if this swing long, man, woo. It's all about the dollar. But dang, this thing, sheesh. As long as the dollar's weakening against the euro, get ready to shell out a lot more euros to buy a dollar, and this thing is going higher. And I'm in it to win it. So this thing, I like this thing coming all the way. I like this thing coming up a lot higher. But, you know, it's whatever. Who cares what I think? It's not about me. It's about the price action. And the last thing I'm going to do, then I'm going to end this video. I haven't done this yet. All right, I'm just going to throw a fib projection onto this chart. And we're just going to say if this is wave 1, and if I can't really see the bottom, I'm not going to spend too much time on this. Now look at that. See, did you see how I just dragged over this zone? On the way down, that zone was a pivot zone and did not breach the pivot, by the way, on that wave 4 on the way down. Did not breach the pivot. And it's right in the box where wave 4 should be. So isn't it interesting that now, if this wants to create an impulse on the way up, the 2236 is right there. And where would the 200 fib be? Probably right at the bottom of that. Man, I think my memory on my computer is getting a little janky. This thing is slowing down. Okay, it won't let me access those because I'm inside of this thing. It doesn't matter. The point is, these fibs are lining up with a known zone that has acted in the past as an important zone. So I think if I don't get stopped out and this doesn't come all the way back down, I think you're going up into this zone here, and that's where I'll take it all off, depending on the structure. Cool. All right, you guys. I appreciate you watching. Thanks for sticking around. And remember, if you're getting value, please hit the like button. Subscribe if you're getting value. I'm dropping 2 of these a week at least, sometimes more. And by all means, check the description of this video. Come join the Professor Trades Club, man, and get massive guidance every day. Get the educational lessons you're going to get for the price are insanity. At just over $30, I don't want to tell you how much money I've spent learning how to trade. Even Elliott Wave, paying guys teach me Elliott Wave. It's in the thousands, multiple thousands. It might even be in the 5 figures, honestly, over the period of years. So here I am doing it for free on YouTube because it's fun and I love it. And I also like the idea of community. So inside of the Professor Trades Club, there's a bunch of great members. We're all exchanging information every day. Armando's a generous soul. He's really about the teaching. He's going to get your psychology right. If you've been moving your stops, if you've been blowing up accounts, if you've been getting stopped out, if you're not consistently making gains, or if you're, well, here's what I was doing. I was trading too big, and I was making these huge gains, and I was giving it back, and I was making it all back again, and I was giving it back again. Break even ain't where it's at, man. Size it down, trade smaller, learn how to trade consistently. That's what Armando's doing. Incredible. The link is in the description of this video. Come join us. A little bit more than $1 a day now. You're getting the Elliott Wave stuff. You're getting the Armando stuff. Cool. All right, guys. That's my plug. Adios. Appreciate you. See you next time. Bye-bye.